Awesome, yeah, so I'm Ben Strack. I'm a reporter for a media company called Blockworks. Got a great panel today. So I'm just gonna ask if Vanessa, Teddy, and Rafael can just kind of introduce yourselves and your companies.
Sure. My name is Vanessa Grellet. I'm the head of portfolio growth at Coinfund. Coinfund is a multi-strategy asset manager. We invest in liquid and early stage venture. And prior to joining Coinfund, I worked for 5 years at Consensus, where I was executive director, and spent also 15 years in traditional finance, where I worked at the New York Stock Exchange and other institutions.
I'm Teddy Woodward. I'm the co-founder of Notional Finance, which is a fixed-rate lending protocol on Ethereum. So it's a fully on-chain, fully decentralized protocol. It's a lot like Compound, but with fixed rates. So that's Notional. And my personal background, I started my career as an interest rate swap trader at Barclays Investment Bank. I was there for 4 years or so, and then traded crypto for a little while, and then started Notional the end of 2019.
All right. Hi, I'm Rafael. How y'all doing? All right. I hope you're enjoying all the snow. I just came from San Diego, so I'm definitely not used to this kind of weather. I'm the CEO of Trust Token, and we are the makers of TrueFi, which some of you may have heard of. It is a DeFi protocol that does uncollateralized lending on the blockchain. So I guess like Teddy, I could describe it as, it's like Compound, but it doesn't take collateral. Instead, it works with asset managers, folks like Vanessa, and does actual underwriting on borrowers. So it's this interesting combination of a DeFi protocol, but with certain centralized components on top of it. We just passed $1.17 billion of loans originated. So it's been very successful and high growth so far. And we're looking to grow it a lot more in the next coming years and ultimately bring all of lending, or at least a huge fraction of global lending, into DeFi. So.
Great, yeah, and I'll start with a kind of a broad question before we dig in. Just kind of I'd love to hear from each of you how you've kind of seen institutional interest evolve among institutions in crypto over the last like 12 months or so. Start with there. You want to kick off, Rafael?
Sure, I'm happy to. So I assume everyone's here because they're interested in institutional adoption of crypto and institutional adoption of DeFi. We've been seeing a ton happening in the last couple of years. So my company actually has a lot of experience with this. We work with Silvergate and Signature and Prime Trust, a lot of banks, work with a lot of traders and hedge funds and so on. And what we've been seeing is, you all have probably been seeing headlines about people making big moves into crypto, people starting to play around with DeFi. What you all may not have been seeing is the amount that goes on behind the scenes in all the institutions that aren't publicly announcing their involvement in crypto. A lot of them, almost all of them, know that crypto is coming and they need to start getting educated. So we've been tapped on the shoulder, and I've gotten on calls sometimes, like with a big bank. I'm not going to name names, but they'll literally put like 100 bankers on a call with us and just say, teach us DeFi. What is DeFi? What does it mean for our business? How are we going to take advantage of this and ultimately not be steamrolled by this when it does come along? So we've been seeing that kind of thing happening behind the scenes, and there's a huge education component that really all of us can be a part of helping to get the knowledge that we've got here in this room, here in this conference, out into society to the many, many companies and individuals that want to understand it, know that it's coming, but don't yet know enough to actually get involved.
Yeah, so I think the first thing I'd say is that, when people say institutions, that can mean a lot of different things. And I think that we've already seen, so there's like, you could call sort of crypto institutions, people like Coinfund. The crypto institutions are already doing stuff with DeFi protocols. They're already using DeFi protocols directly and have been for a while. Now, the sort of more traditional financial institutions, I think my personal opinion is that traditional financial institutions using DeFi is still kind of a ways away. So I think that maybe something like a TrueFi would be sort of a closer step for them because you guys have the centralized component which sort of it mirrors the traditional experience, right? Because they have a legal entity that they're sort of working with, right? But like a pure on-chain DeFi protocol, we have not seen sort of really traditional institutions start using those yet, at least from our side. And I think that like ultimately, the real reason for that is just because like if you're talking about using a real on-chain like fully decentralized protocol, it's just an entirely different way of doing things, because ultimately you don't have a human on the other end of the line who's the ultimate arbiter of what has happened that you can kind of call, and if you think something's gone wrong, right? Like if everything is codified, then there's nothing that like a human contact at the protocol can really do for you. And that's like a completely different way of doing things. So I think that like traditional financial institutions using purely on-chain protocols, like especially lending protocols, like I think that that's still a little bit of ways away. I could be wrong, but that's at least from what I've seen.
Yeah, do you agree with that, Rafael?
Yeah, so I want to let Vanessa chime in here in a minute, but Teddy, so I disagree with that way of seeing it, because I think institutions are already using these totally decentralized protocols, but the model that we're seeing emerge is decentralized protocols with layers of centralized actors on top of it that help to provide an adapter for institutions to come in and play. So I think a great example of this is what Compound's doing with Compound Treasury, what Aave's doing with Aave Arc, and we're following a similar model with TrueFi, where I totally agree with you. JP Morgan, when they start putting money into DeFi protocols, it's not going to be someone at JP Morgan downloading MetaMask and signing a transaction. I think it's going to be JP Morgan working with someone like a Compound Treasury, an Aave Arc, a trust token to get access to these truly decentralized protocols. So that's the model that we're seeing emerge. It's really like the core protocol can be completely decentralized, but then you can have a whole bunch of different, on-ramps and off-ramps and service providers around it that can help get the institutions on board and get them comfortable.
Yeah, I agree. All the institutions we've been speaking to are wanting to use MetaMask Institutional, ParaSwap Institutional, Aave Arc, and all these projects that are giving them KYC access, because really the stumbling block is compliance for them, and they cannot just be putting assets into pools that are not KYC'd. So we'll see the emergence of these business models, and market makers and traditional finance are already in those pools and already trading. So that's a given. That's the first way of how institutions engage. The other interest that we've seen in the past year is pension funds and large asset allocators who are really trying to get into either crypto funds or other ways to have access to yields. And so you see them investing in either traditional VCs, whether it be an A16Z that has a large allocation to crypto, or trying to come into institutions like us to have access to deal flow and to returns.
Yeah, so I'll just kind of follow on that a little bit. So, I think that there have been this sort of like the Compound Treasury thing and the Aave Arc. I would be interested to see sort of like usage statistics, because I think if you look at Compound right now, there's something like $6.9 billion on that platform, and I could be wrong here, but I think the majority of that is not coming from like the Compound Treasury thing.
Totally. And so I think it remains to be seen how successful this model is going to be. I think this is the model that our protocol, Compound, Aave, MetaMask, many others are moving towards, but I completely agree with you. It's still largely unproven. These are absolutely early days, and it might be the case that this model doesn't work. It might be the case that 5-10 years from now, the vast majority of the liquidity going into these protocols is coming through some of these more regulated, more compliant on-ramps and off-ramps. I don't know. It is a bet that I think is worth taking and that my company is personally investing in. But whether it's the ultimate strategy, I don't know. We'll see.
Yeah, and Rafael, if you could just maybe elaborate a little bit on on how TrueFi is kind of trying to bridge that gap to involve more institutions in your offering.
Totally. And so I think Vanessa hit it on the head when she said it's really about compliance. And I think, Vanessa, your background is really interesting because you spent 15 years working in TradFi, and then somehow we pulled you over here into the crypto world. So that's that education piece, bringing more people in. So
I'm also a recovering lawyer, unfortunately.
Oh, okay. All right. Well, interesting backgrounds lead to interesting perspectives. So I think that's great. So that compliance piece is really a core piece here. That let's imagine an institution that a traditional bank from TradFi wants to borrow some capital from a Compound or an Aave or a TrueFi or a Notional, right? They're unlikely to want to just go into a lending pool and just take out a loan, not knowing who any of those lenders are. Right? Their compliance team is probably not going to be comfortable with that. And so that means that what Aave and TrueFi and many protocols are doing is looking into solutions like building KYC-only pools that can run alongside completely open, unpermissioned pools where anyone can go in. And you can have pools that are KYC only, you could have pools that are accredited only, you could have pools that are non-US, you can have a whole variety of different pools in a protocol like an Aave or a TrueFi that borrowers with different levels of risk tolerance could decide that they want to go into. So that's one of the ways that we're working on this type of thing. But there's a lot of different components. Beyond just compliance, institutions care about reporting. They want to be able to send something to their regulator about, hey, what kind of transactions are you doing? How do we know that these are sufficiently low risk, given that you're a bank or that you're another sort of regulated institution? All these sorts of features are things that are important for a regulated company or an institution to come and play in DeFi, and it requires a lot of stuff that is difficult to build directly into a DeFi protocol. So you end up needing a bunch of software around it, and that's what folks like MetaMask Institutional and so on are working on.
Yeah, Vanessa, I did just want to kind of ask you, obviously Coinfund is investing in these crypto and blockchain companies in the early stages and looking to grow them. Just wondering from your perspective, some of the companies in Coinfund's portfolio, how much they're depending on institutions to come in and maybe some of the tools they're working on for institutions.
So I don't think some of the companies we invested in had enterprise as their target clients or TradFi, but we did invest in regulated exchanges and things like that. So they've been very successful in bringing in those institutions in. So for example, we invested in LedgerX, who was acquired by FTX. We invested in other exchanges. And so what I see right now is the companies are heavily involved in DeFi. There is a demand from institutions to have access to what they offer. So for example, Paraswap is an aggregator and is currently testing solutions for institutions to trade on Paraswap and giving them access to these segregated KYC'd pools and aggregation layers. So I think it will be part of the future. We have to be realistic as to how institutions can engage with these protocols and these companies. I think there's always a threat that the SEC may take action, although we haven't seen anything that's really massive at this stage. So I think it's more about opportunities with the institutions than anything else.
Vanessa, that sounds like a great portfolio you've got. We should talk about getting involved in TrueFi.
Absolutely.
But I actually have the same question for Teddy as well. Given that Notional is doing fixed interest rate investments, right, on the protocol, that seems to me like something that actually could be really appealing for some more traditional investors that may not want the sort of interest rate volatility that Compound, Aave, and many other protocols have. How much is Notional focused on the institutional investment side and institutional borrowers, and what's Notional's approach for how to be able to bring them in?
Thanks for that question, man. Yeah. So I would agree. I mean, you're selling Notional for us. We offer fixed rates. So people that don't want the interest rate volatility, they don't have to have that if they use Notional. And what we've seen so far is that Notional's a pretty new protocol. So we've been live on mainnet for about 3.5 months now. And the first kind of institutional-ish interest, I would say, that we've gotten has been from sort of family offices, right? So like these are, people that are very familiar with crypto, are experienced with crypto, but are basically just like, they're individuals. They're high net worth individuals. And so like these are people that can sort of do something that's maybe a little bit more new and like don't have the sort of like, the kind of procedural burden of a more developed institution. And so we've seen, like, for sure, a lot of interest from them because for exactly the reasons that you stated, right? Like, they want the fixed rate of return. So that's, like, the initial interest. And then as for kind of the borrowing, we already have some of the kind of crypto lending desks. I imagine guys that are using you as well, using Notional. And because basically the product that we offer is quite similar to the product that they trade in centralized crypto lending markets. It's really quite similar, right? It's like the crypto lending markets that are sort of the CeFi crypto lending markets are all fixed rate. So like Notional offers something which looks a lot like what they already do, right? And so we've already got them using Notional, and that's why I said like the crypto institutions are definitely comfortable using DeFi protocols already, and they are, they are, yeah.
Totally.
Yeah, and just kind of curious how you feel regulation might play a role in the continued institutional adoption of crypto in 2022. What you might be kind of monitoring from a regulation standpoint. Yeah.
Vanessa, you want to take this one? Probably your favorite question.
I think let's focus on maybe on the U.S. regulation and maybe general AML KYC FATF. I think we'll see more and more companies and protocols that will need to have sort of this layer, centralized layer, and regulators will want to see an entity that they can hold accountable for KYC and AML. So I think that's the major issue that I see in terms of adoption and maybe just new opportunities too to create new companies on top of protocols. I don't think the protocols themselves are at risk. It's really the access to it. So we'll see if there's major enforcement, but I don't see the regulation or the legislation changing dramatically in the coming year. I might be wrong. And I think we're just going to wait until the political divide on what we should be doing is really really high, and so I don't think there's a place where regulators and legislators can really come together in order to take action. When you think about the last time the regulators really took action, there was a major global meltdown, and there's nothing here to trigger that at this stage in crypto so that it prompts action to want to protect the investor public or the public at large, or see that there's systemic risk. So it's kind of hard to see where they would want to take action, is my bias.
Well, what do you think about like protocols that are, or protocols / companies that are completely on the other side of the spectrum, where it's like there is no legal entity at all, like something like Maker, right? Like, how do you think that the government is going to handle that?
Or even the trend of nowadays, protocols with anonymous teams.
I don't know when you became like the designated representative.
Well,
by the way.
I'm a decentralization maxi, so no problem.
You worked at Consensus, so.
I think, exactly. I think you do need to, there's two things. There's the enforcement side, and then there's the legal side. So on the enforcement side, if you look at the current decentralized protocols, even the ones that have gotten rid of foundations, in essence, like the key stakeholders still have legal entities where regulators can find them. And I think there's an illusion to say that, oh, we have no identity, no entity, and nothing can happen to us. That's just not true. It's actually unlimited liability that you have, over your head as a contributor. So I don't think there's going to be anyone or any regulator or any legislator that's going to say, oh, we find a decentralized protocol and we're going to regulate them. That's just not happening. I think the SEC is, on the other side, is like, if you're sufficiently decentralized, you're just a utility, basically, and everyone can use the utility, and it's an open source protocol. And so I haven't seen regulators come after open source protocols separately from crypto. So I don't see why they would need to take action here.
Yeah, I think that's a valid point. And to add on to that, I think the strategy that my company, with TrueFi, and I think many of the protocols are taking, is those access points are very important, especially institutions, which is the topic of this particular conversation, really care about knowing, hey, if I'm going to be borrowing from a lending pool, if I'm going to be investing in a DeFi protocol, is this 100% legit? Is this regulated in all the right ways? And so we really treat it as a competitive differentiator. So it's been something that we've been investing in for over 5 years, of really being super buttoned up on the regulatory and the legal side. And even when the regulation is not completely clear, like it isn't today, we are looking over the horizon and saying, okay, what's going to be coming down the road? Do we need to get a broker-dealer's license? Do we need to get other sorts of regulated entities to be a part of this to help provide some of those on-ramps that institutions are going to need?
Great, and there's a couple more things we could touch on, but I did promise that we would have a few minutes for Q&A with the audience. So we'd love to hear what you all have to ask.
So even though these instruments look like a traditional income-producing instrument, since they fall into digital assets, oftentimes they fall into a different asset class. And people just say, well, I can't invest in that asset class. Hey, great, it's 6-8% per year, lovely, but it's digital. I got to stay away from it. How do you bridge that?
And what's your name?
Maybe, by the way, for these questions, we'll do one person answers it, and then we'll go to someone else. So,
what's your name, by the way? Jeff. Okay, thanks for the question, Jeff. So I think it's inevitable that institutions are going to be investing in digital assets, regardless of what they say today. It's, think of it like, what the internet did to finance. Like if you said, well, I'm not going to use online banking, right? That's a digital asset already. When you're using, you used to have cash in a vault. Now it's just bits in a computer somewhere. Imagine someone saying, well, hey, I don't trust bits in a computer. I only want to hold paper cash, right? What kind of institution could run like that today? You would be completely shut out of how finance works globally. So that's where we think things are going, that it's a technology more than an asset class, and there's a whole variety of asset classes that can all work on this one technology.
So first of all, thank you very much for this presentation. Really, really educational. My name is Jason Schwartz, crypto tax guy ETH, and I recently wrote an article on the taxation of DeFi solely really as an enthusiast who also practices law in the traditional space. I'm sort of the view that we as a community have to sort of get together and try to, lobby the regulators. Do you guys agree? And if so, what do you think is the best way to sort of organize?
So there are several organizations already that lobby at different levels. And if you think of taxation, there's this Proof of Stake Alliance that has been very active and even prompting the regulator to make a decision on staking. Then there's the Blockchain Alliance. There's several organizations that represent large institutions and actors in the space that have been very active in DC and in state, also with state regulators in order to help them understand. We're still at the education level with politicians, at least I would say, and then just trying to make everyone understand the implications and the opportunity of digital assets for this country and for the world. And so if you want to get involved, I would encourage you to sort of reach out to these organizations and understand their perspective and what they're doing and how you can get involved. But I think, you know, regulation on the Hill and the way it's done, you know, we're not going to tweet it away. It's not. We need to also, you know, meet people where they are so that they understand what we're doing.
Yeah. Hi, my name is Davis. I was just curious, as the uncertainty around regulation, risk, et cetera, as that resolves, do you expect the hurdle rates that institutions are looking for in DeFi, do you think that'll come down, and will that ever look like what we're seeing in CeFi today?
Yeah, definitely. I think that, like, you know, kind of as we've been talking about here today, regulatory uncertainty is one of the largest reasons why people aren't using DeFi protocols. Now, it's not like the full thing, but like it's a really, really big part of it. So I think that as that clarity, you know, as we get that clarity, I mean, absolutely, I think there's going to be like just a massive amount of capital that comes in. And I think, you know, it's not going to be a binary thing. It will happen. It'll happen on a drip basis, as it has been happening. And I think what you've seen now, or what you are seeing now, is that you know, you have these institutions that are sort of hamstrung and unable to access DeFi and the sort of yields that they offer. And so what you've got is like sort of DeFi native funds, and you've got new DeFi native funds that are being started, and they're raising money from people, like from the actual limited partners, right? And like that money, these new funds that are explicitly DeFi native, like that is how a lot of the capital is currently coming into the space.
Yeah, the other thing I wanted to mention is, you know, exposure to Bitcoin and Ether. I think this is where a lot of the institutions are. They're not even into DeFi. They're just like, okay, can I invest in Bitcoin? Can I have Bitcoin on my balance sheet? What are the products that can give me access or exposure to Bitcoin? So trusts, we're still waiting for ETFs. So I think there's some maturity there, but for them, it's really so Bitcoin is a little bit of a beta at this stage, but their entry point into getting into digital assets.
Yeah, we're seeing exactly the same thing. First it's Bitcoin, then it's Ether, then it's DeFi and other tokens. And actually, even before an institution invests in Bitcoin, usually the principals at that institution, you know, the partners and the management and so on, they're personally investing in things, getting comfortable with it personally, and then they make an organizational decision.
Vanessa, do you expect we could see a Bitcoin ETF in the US this year?
TBD. I don't think so.
All right. Well, let's see a poll here as we close out. How many think that there'll be an ETF by the end of the year? Let's see. Wisdom of the crowds. Wisdom of the crowds. Okay.
Pretty bullish.
All right. Well, wisdom of the crowds or stupidity of herds. We're not sure there. But anyway, let's give a very, very resounding applause for this brilliant panel.